Hello, it's good to be back with you for this Investors Breakfast debrief. This presentation was all about going back on 2017 and looking ahead to perspectives and strategies for 2018. So as always, there was a good turnout of people in the room to listen to CPR's experts. It appears that investors stay hungry for news, even when most of the economic indicators are looking up. So what have I taken away? Well, the most striking announcement is that at CPR, we are anticipating at least 3 increases in US rates next year. The second point is that they are reducing their investments in public and private bonds to a bare minimum. But let me reassure you, they will be continuing to invest in the high-yield European bonds. Third point, they are remaining optimistic about the shares, even if the shares are expensive, as risk premiums are still pressing in favor of equities, except in the US. So in the world of shares, they like Japanese stocks particularly. Letizia Baldeschi makes it one of her favorite markets. Even if in local currency, Japan has already gained close to 19% this year. Yet, as it is one of the few markets where corporate profits are progressing faster than the stock exchange, we need to take that into account. They also like US stocks, even if the progression of indices would be enough to chill off an Eskimo. The trouble is, here too we are lacking strong arguments to avoid them. Those who did this year are likely to pay a high price. As a consequence, everyone is finding positive arguments to calm themselves down. The latest example, profits of companies that are heading the right way for 2018. Malik Haddouk also mentioned inflation a lot. There is none, or almost none, in the majority of developed economies, despite the rise in prices of raw materials. So they also talked about the UK a lot. In terms of growth, everything is going swimmingly for now. And it's all mainly thanks to foreign trade that is driving the activity with the help of a wilting pound. Unemployment is at its lowest since 1975, and yet wages are not going up. In fact, in real terms, they have dropped. Yet I know that the split from the continent won't actually happen before the 29th of March 2019. Until then, the situation can still evolve. Of course, our experts have gone through all the possible risks with a tooth comb and identified some, starting with China. For Letizia Baldeschi, the major risk is a dramatic adjustment of the financing of China's growth, which could light fires. China, always China. All things considered, I got the feeling that they were not really worried about the next 3 months. Let's hope it lasts.